typically bullied by the regulatory agencies. And to avoid that bullying, they feel under pressure to pay bribes. And therefore, sometimes even before the bullies come, they're already offering them something, out of fear that I don't know what the tax man is going to do. I don't know what NAFDAC is going to do. They're going to surely find some fault and they're going to deal with me. So rather than put it as service providers taking a lower fee, rather service providers have an aggregation point where they can distribute their fees over a large number of SMEs, so it is actually worthwhile helping them. So if you have one of the big fours, or if you have a Perchstone and Graeys, actually take a matter up on behalf of 30 companies, they can charge their normal fees, but for each of the companies, it's at a reduced rate because they don't have to pay individually. So that's the principle, that aggregation of people, and it helps to create a buffer so that the small company doesn't feel too bad. In our own way, we're testing this out. Where there is an MSME that we're supporting. I hope he's actually online at the moment, who has been having challenges with NAFDAC. We can walk up to NAFDAC and we can say it as it is. His company can't do that without risking something much bigger. So that is the principle, that you can actually have like a big brother watching out for you, or a big sister watching out for you and helping you through, so you don't feel obliged to pay those bribes. Anyway, that said, the importance of CAMA is also so we understand what it is that we're supposed to be doing, so we don't fall foul of those who would like to prey on the MSME, and we understand what our obligations are, and we understand how to meet those obligations. And also, if there are any benefits in it, that we also know how to take advantage of those benefits. Without much further ado, let me hand over at this point to Mrs. Tomilola Tobun, who will then give us some outline of what this new beast is that is called CAMA 2020. Thank you very much.
Thank you very much,
You're welcome.
Mr. Apampa. Okay, so we'll just go right in, but I would like to share my screen and so that the participants can also follow. But then I can see that the host has disabled the participant screen sharing.
We'll just make you a host then.
Okay.
Let's quickly do that. Okay, so you're a co-host now. You should be able to do that.
Okay, I can do that now. Okay, this is it. Can you see my screen, please?
Yeah, please go on. You have 30 minutes.
Okay, I'll try my best to keep within time. Okay. Okay, so CAMA is one of the most significant business legislation in Nigeria. And the last time we had one, I think the first one was in 1968, and then we had a review in 1990. And then, so this is about 30 years after that we're having the review of another one. And it has really generated a lot of discussion and comments on many. The implications of this legislation is far-reaching. One of the underpinnings of this review, or the reasons for the review, is ease of doing business. And that's why the MSMEs are actually one of the major considerations when the review was started. And this is important because if you look at MSMEs in Nigeria, they're the drivers of the economy. If you look at the 2019 report of National Bureau of Statistics, it says that there are about 41.5 million MSMEs in Nigeria, and they also contribute to about 46% of the gross domestic profit or GDP of Nigeria. So the gross domestic product of Nigeria, and that really means that SMEs are key to the economy, to many other things like job creation, revenue generation, and economic diversification. So that's why MSMEs were really, really important when in the considerations of CAMA. Other things that were also considered is the alignment of the law with the 21st century technological advancements, the international global best corporate practices as well. So let's look at the things like the one-person company. Such changes or such allowances had been given even in UK and also like third world countries like India as far back as I think 2013. And so it was just more than ripe or overdue for Nigeria to also comply or align itself with those international best practices. Okay, so if we can just go right in. So, if you look at the CAMA is that regulation which governs or which the legislation that regulates the management and the functioning of corporate entities in Nigeria. So we can talk about that companies or limited liability partnerships.
I wonder if you can project the slides so we can see them better.
Okay.
If you put them in slideshow mode.
Okay. Yes. Is it better now, sir?
Yes. Okay.
Okay.
Thank you.
Okay. Welcome. So we talk about the business entities that the CAMA regulates. So we talk about companies, limited liability partnerships now. Before we didn't have the limited liability partnerships or the limited partnerships, but now we have that by virtue of the new CAMA. So previously, we were just companies, either companies, private companies, public companies, companies limited by guarantee, business names, and incorporated trustees. So let's look at the gains for MSMEs. What is new in CAMA that MSMEs, that can really excite MSMEs? And it's important to state that the reason, some of the considerations in the review of the CAMA was also to reduce regulatory hurdles for MSMEs so that MSMEs can be to focus on scaling their business, growing their businesses, as opposed to just being overwhelmed with compliance issues. One of the most exciting things about the new CAMA is the incorporation of a company by one person, just one shareholder. Now, previously, you had to be two shareholders, and you would realize in practice that many people, the promoters of these companies, they would rather just be the ones, managing things. Then they would then find one person probably who is not even so much interested in the profitability of the business. And so that's why it was good. It's good now that one person can be the only shareholder of the company. Another important thing is that one person can also be the director of the company. However, the company must be a small company. I'll shed more light on that a bit more. Another new insertion in the CAMA is the issue of statutory compliance. Prior to now, a legal practitioner had to sign off on this statutory compliance. But now, you as a promoter of the company or your agent, the agent can still be a lawyer, can sign off the statutory compliance to state that all the requirements of CAMA has been fulfilled and that the commission can go ahead to incorporate the company. So looking at MSMEs and which qualify as small companies, I had mentioned that a company cannot be, one person cannot be the only director in a company. It will have to be two. except if you are a small company. So let's look at the features of a small company in accordance with Section 394 of the new CAMA. You have to be a private company. Your turnover must not be more than 120 million. Turnover meaning all the amounts of money that the company has generated in a particular period of time. And your net assets must not be more than 60 million. Net assets, that's when you remove all the liabilities from the assets of the company, that's which you have left. It mustn't be more than 60 million for you to qualify as a small company. None of the members of the company must also be a foreigner, a government or a government agency or a government nominee. The first four requirements were in the former CAMA. The only thing two things have changed. The first one is the figures in terms of the turnover and the net assets, because of course it has to be in line with current realities as well. And then the issue of 51%. So the directors, that was also in former CAMA, directors of the company shall hold not less than 51% of the equity share of the company. You know that sometimes many small companies are either family companies, and so they are the one that has a substantial interest in the company. So these are the features of a small company. We can then go ahead to look at some of the exemptions, the very interesting exemptions that has been given to small companies by virtue of the new CAMA. So I think I'd mentioned that of the one director. So maybe the question that would come to mind for a small company that has already maybe 2 shareholders and 2 directors, and maybe you're thinking, oh, does that mean that this will not apply to me? This would apply to you, and then you can also regularize your records once CAMA has been passed into law, but once it has come into effect and it's going to be implemented, you can, for instance, go to the CAC to file a change of shareholders or a change of directors. What it means is that probably upon receiving the consent of the other director or the other shareholder as well, who was really not interested, the other shareholder can transfer all his shares to you, and then you can go to the CAC to effect that change at the commission. So another interesting thing for small companies and single shareholder companies is that they are not required to have the annual general meeting. Prior to now, all companies must have the annual general meeting every year. And this is quite interesting because many times, so what we see in practice is that many small companies, they don't even have the AGM, they just file their returns out of compliance and out of obligation. So now they don't have to have an AGM. So maybe the question that also would come to mind, so how will these small companies carry on or transact their businesses going forward since we don't have AGMs anymore? What are the kind of meetings that the small companies will then have? So we have the extraordinary general meeting. This one would allow small companies to have meetings now and again. And this would really be important where it's a meeting where all the shareholders, for instance, would have to vote. So let's take, for instance, a resolution where there's need for a resolution on the change of the name of the company or the change of the object. That means that all the shareholders have to vote as to that resolution. Then they may have an EGM. The board or the members of the directors can have a board meeting as well, maybe on such issues that really does not require the vote of all the shareholders. They can just unilaterally decide on a particular resolution. They can also pass written resolutions. So instead of, for instance, going into an extraordinary general meeting, the written resolution will allow you to actually just sign once you are agreed on a particular issue. You can just, all the directors or all the members of the company can just sign a resolution without necessarily coming together in a meeting. And the very good part about it is that all these meetings can be conducted virtually. So whether the EGM or the board meeting, and when you don't need to have a meeting or conduct a meeting virtually, you can. On the issue of virtual meetings, so I think I had mentioned that small companies can have their meetings virtually now. and unlike before. So if you recall, many companies during the lockdown period as a result of COVID, they had quite a number of hybrid versions of meetings, because at that time, virtual meetings had not been approved by the commission, and many companies did not have it in the articles of association. So what they were doing was they had to have in-person meetings where they're somewhere, and then other people join in the meeting. They join online onto the meeting. And even at that, they could not participate in those meetings. So that was why it was necessary for them to appoint proxies, so that those proxies will then vote, will then cast their vote at the meeting. But it is also important that for small companies to be able, whether small companies, private companies, all companies, for you to be able to take advantage of the use of virtual meetings, you must adopt it in the Articles of Association. Another very important and interesting provision that is now in the new CAMA is the dispensing with the appointment of auditors. Also, you also do not need, as a small company, you do not need to submit your accounts for the purpose of filing annual returns. So that means you can more or less just file your returns. You're annexing a certificate. Once the certificate is signed by the director and the secretary, then showing that you have met all the requirements of the small company, showing that you have also not asked that the public should subscribe to your shares, then you can file your returns, annual returns, without the audited financial statement. I must, however, state here that for the proper or pragmatic application of this provision, one must look at it in consideration of other laws that are also important. So look at things like Finance Act and the Companies Income Tax Act, because by the provisions of Finance Act, in defining a small company, the threshold of a small company is a company whose gross turnover is not beyond 25 million. We see that that itself is different from the definition of a small company in CAMA. So what would happen is that if you're a small company, let's assume that your turnover is about 40 million. So in CAMA says that your should not be more than 60 million. That means that you would have been properly categorized as a small company. But in view of the Finance Act, which is 25 million, you are already a medium-sized company. So you would have to take a combined reading or a combined application of those laws to be able to fulfill your regulatory compliance requirements, because that's actually very key. The Companies Income Tax Act also says clearly that if you're going, Section 51, if you're going to file your annual returns, you must do it with, or you must annex your audited financial statements. So you have to comply with that, even though CAMA, by the provisions of the new CAMA, you can now file your annual returns without annexing an audited financial statement. It's also important to state that as a small company, you don't need to have your company seal. This actually applies to small companies, both small company and private companies as well, because prior to now, it was necessary for a company to, for instance, validly authenticate its documents by using a company seal. But now you don't have to, it's not mandatory. You can actually just do that you can authenticate your documents by the director and the secretary, for instance, signing documents. Document that is property or legal title. You do that validly executing that document in the presence of a witness. It's also important, now is that you may not appoint a company secretary. before it was mandatory by the provisions of the Act for you to appoint a company secretary. But now, as a small company, you can you may not appoint a company secretary. I would say that looking at taking into consideration a few things, it is important to you can appoint another officer of the company as a secretary. For instance, when it comes to, there's some kind of public documents that may require the authentication by two members of the company. So in a situation where you are a small company and you are the shareholder and you are the director as well, you would probably need another person to authenticate that document. If you if you had signed that document as the director, you may need the secretary to also sign that document, also for the purpose of succession. Because if you look at a single shareholder company, the question that comes to mind is what happens to that company if the shareholder dies? And probably he was also the only director. The practical application and in practice, what happens is that when the holder dies, the executor of his estate or the personal representative would company give notification of the death of each person. And then what will happen is that the name of the executive personal representative would then put in the register of members. So if there's a company secretary, it makes that even for especially for single shareholder companies, unlike when there was no company secretary and it was just the director was the same person as the shareholder. So moving to other key changes and compliance requirements now that are not just specific to small companies, but that are more general. One of the very important additions and into the new CAMA is the concept of issued share capital. So authorized share capital was what we had before, but that has now been dispensed with and removed for our company law, because what we can now apply is the issued share capital. So authorized share capital is the amount of shares that a company can issue. So it more or less just gives an increased scope or a large scope of the total amount of shares, and you don't have to issue all. Previously, once you just you issue 25%, the minimum requirement was that 25% of those shares should be issued. But now what we have is issued share capital. That means that the company must state that this is the number of shares I am issuing now, and you are at the same time allotting it. This is quite important because previously, as we had the authorized share capital, it wasn't a true reflection of how much the company was capitalized to. But with the issued share capital, all the shares of as the company is issuing it is allotting it to specific persons. You can actually it's a better reflection of how much the company is capitalized to. And that's the major difference. In terms of application now, previously, the minimum capital that a private company can have is 10,000 shares. And for public companies, it was 500,000 shares. But with the new CAMA, the minimum requirement of share capital for private companies is 100,000, and for public companies is 2 million. So once the new CAMA takes effect, many companies would want to now start regularizing their records in terms of their share capital. So someone who had probably had 10,000 minimum shares before would then want to increase its shares. So how will that company do that? It would pass a special resolution increasing the shares of the company, and then it would file that resolution at the Corporate Affairs Commission, paying the appropriate filing fees and the appropriate stamp duty fees as well. What is also important now, as opposed to what used to happen before, is that as you're increasing your shares, you also have to now make that change in your memorandum and articles of association. That means you would consequently be filing both your resolution and the amended MEMAT at the Corporate Affairs Commission. Going to office of the company, we have 4 or 5, please confirm, so that I can wrap this up. Okay, so talking about the officers.
You have like 10 minutes more.
Okay, 10 minutes, thank you. Okay, so talking about the officers of the company, this, my slide really reflects the requirements for a public company. The managers of the company, that applies to both private and public. That means that the managers of the company, their remuneration is something that must be disclosed now. I think these are more like corporate governance principles that have now been inserted into the new CAMA. The managers of the company their remuneration must be disclosed at the AGM of the company, whether private or public. For public companies, the same person cannot be the chairman and CEO at the same time. This also, this is just to checkmate too much control in one person in public companies. Also, multiple directorship is limited to 5 at a time, meaning that if you are a director in 5 public companies, you cannot be a director in the 6th company. Your maximum amount of participation as a director in public companies is limited to 5. Then independent directors, the minimum number of independent directors as stipulated in the new CAMA is 3. That itself has raised quite and generated a number of comments and discussions, because for public companies, you don't even know how many directors are on the board. So many people have spoken that this particular provision doesn't take into cognizance the scope of the business or the type of the business. However, that is the minimum requirement for public company now, to have 3 independent directors. Audit committee, it consists of 5 members as well, 3 members of the company and 2 non-executive directors. For private companies and also for all companies really, once you are disqualified as a director, or once you have been removed as a director previously, it disqualifies you from being a director going forward. Before, all that we had as the requirements for being a director, of the things that the conditions if somebody qualifies as a director, in those conditions is that you must not have been previously removed as a director. Another interesting part of CAMA that has generated positive comments is registration of charges. Previously, for you to register a charge, meaning that maybe when you take a loan from the bank and your collateral was used as security, before now, when you want to register that charge in the Corporate Affairs Commission, the CAC will charge about 10,000 naira for every 1 million if it's a private company, or 20,000 naira for every 1 million if it's a public company. But now, by the provisions of the new act, this registration, filing, and release of that charge shall not exceed 0.35%. It's interesting to know that for many SMEs are beginning to look at the collateral registry now, even not just the commission, in terms of credits. So it's just good to state that also when small companies, small businesses want to get credits, the creditors are beginning to use movable assets as collateral. So that's why we have the National Collateral Registry of the CBN, which allows creditors to register the movable assets. It could even be the receivables of SMEs as a collateral for the purpose of the credit or the loan that they have received. Another very important compliance requirement is the issue of significant control. So the CAMA now defined significant control as a person with significant control as somebody who owns 5%, at least 5% interest in shares, or 5% voting rights, or someone who can appoint or remove majority of the directors of the board. What the requirement is that once you have that significant control, you must inform the company within a period of 7 days, and also within a period of 1 month subsequent to that, the company must then inform the commission that there is this person who is a substantial shareholder or a shareholder with significant control in the company. Other key compliance requirements, another one is on the restriction on on transfer of shares. So previously, what we had was just preemptive rights of shareholders, but the new CAMA has now gone ahead to state specific things with regards to transfer of shares. If you want to transfer assets or you want to sell assets, which shares is also one of them, more than 50% of the total value of the assets of the company, you must receive the consent of all members of the company. There's also the concept of right of first offer, meaning that if any existing member of the company wants to sell his shares to a non-existing member, he must first offer those shares to the existing members. And this is quite important because it's placing priority on the participation of current shareholders in terms of when shares want to be transferred outside the company or outside the existing shareholders. We also have the tag-along rights for minority shareholders, meaning that, and the implication of this is that once a company wants to sell more than 50% of its shares to non-existing members, it must give the minority shareholders the right to tag along on that share sale. And this requirement means that the non-existing members will then have to buy in the shares of the minority shareholders on the same terms as has been negotiated with the majority shareholders. Before this concept of provisions can be inserted, or before it can be applied, it must be inserted in your articles of association. Another key part is a company acquiring its own shares. Prior to now, it wasn't something that was approved by the CAMA.
2 minutes more, just 2 minutes more.
2 minutes, okay, sir. Yes. If you want to, the company could not buy its own shares, and it also couldn't acquire its own shares. But now it can do that, and that's what is called treasury shares. A company can actually buy its shares, however, it must be paid up as well. One of the key reasons why this is important, so a quick example is, for instance, a unit microfinance bank that's by the CBN regulation of 2019 says that you should have a minimum share capital requirement of 100 million. So it's very possible that maybe there are some investors who have taken the shares, about 50 million. And not forgetting that we now have the concept of issued share capital, which means that at the point of incorporation, all of the shares must be allotted. You cannot leave some unissued or unallotted anymore. So at that moment, it might be the pragmatic thing would be that the outstanding 50 million shares may be something now, but it must also pay for these shares. Also, share buyback. The company cannot buy its shares back either from an existing shareholder, the open market, security holders, or employees under an employee stock option. But it's important to say that treasury shares of a company cannot give the holder voting rights. So there are three things. As the holder of treasury shares, so the company in this situation, for instance, you wouldn't be able to vote based on those shares or attend the general meeting or claim dividends. And also the treasury shares of a company must not be more than 15% of the nominal value of the issued shares of the company. Okay, I know I think I've exhausted my time, but just to state quickly that the two corporate entities that have now been included in the new CAMA is limited and easy to wind up. It's it's an interesting, especially it's quite interesting and innovative because this corporate entity also has corporate personality. It can be sued, it can sue, it can buy property as well, and it doesn't have the minimum share requirement like companies. So it's very easy for fund managers of whether private equity firms or venture capitalists to make use of these structures for their investments. Thank you very much.
Thank you so much, Tomilola. We have a number of questions, and I wonder if you wouldn't mind taking the questions very quickly before we hand over to Dr. Muda Yusuf. Just very, very quickly and briefly, what's the effective implementation date for CAMA?
Okay, so by Section 6 of Authentication Act, it says that the sufficient evidence that a law has been enacted is when it is gazetted. So when you say gazetted, it means that that law has been given a number, it has been given a commencement date. So CAMA, as we have it, has not been gazetted. Once it's gazetted, it comes into law. It is effective immediately.
Okay, so it's not in force right now.
It's not in force right now, but I'm also aware that the Commission is doing a lot, working with the National Assembly to gazette this law as soon as possible. I think within the next 1 month.
Okay, I think that also goes with how we access the provisions of the new CAMA, because they're asking, how do we access it? But I guess you can't access it if it's not in force.
Mm-hmm. Yeah, so when this was passed, it was signed by the president, so there are some copies that have been making the rounds, but it's best to wait for the gazetted copy so that you are doubly sure that these are the final provisions of the law.
Okay. Someone said while you were speaking that, okay, what if turnover now increases to more than 120 million, say after 3 years of operating? What then happens?
Okay.
You have to change the form of incorporation or? Okay.
If your turnover increases, so that means in this situation now, that's to more than 60 million. That means you're no longer a small company. And that is why when they are deciding, when they're looking at the category of small companies, they look at the preceding year and the current year. So if in the preceding, you must be, for you to have satisfied that requirement, that means in the preceding year, your turnover wasn't up to 60 million. And in the current year, it wasn't up to 60 million when you've been operating for a while. So if, for instance, in the preceding year, you were, let's assume, 80 million, maybe your turnover was 80 million, and it sort of dropped in the following year, in the current year, you will not be categorized as a small company. So it has to be the preceding year and the current year that has to qualify you.
Okay, one final question before we hand over to Dr. Yusuf. Although there are more questions and we will get to it, I hope while you're listening, you can actually respond in the Q&A section, is that if an SME is not required to appoint an auditor and to file yearly, how is it going to calculate tax due?
Yes, and I think I had alluded to this by saying that we really cannot just look at the application of this particular provision on its own. You have to look at it in consideration of other laws. So if you are a small company, like I had said, in view of CAMA, you are not a small company, for instance, if your turnover is more than 25 million, you know, in the light of the Companies Income Tax Act. So you really have, and for you to be able to file your returns at the FIRS, you have to have an audited statement, a financial statement. So it's, for me, I think the CAMA or the National Assembly and the draftsmen, they were just trying to look for easy ways by which very, very small businesses, maybe micro businesses, can file their returns. However, in practical terms, because even as a very small business, as long as you're a company, you have to file your returns at the FIRS, even if you're not making profits. The requirement by Section 51 of CETA is that you still file your returns and your auditor statement, because it is by looking at the statement that they can really see that your turnover is less than the requirement and you are indeed a small company.
Thank you very much indeed. There are many, many more questions in the Q&A area, which we hope you will also continue to help us respond to. But without much further ado, let us invite Dr. Muda Yusuf, who is the Director General of the Lagos Chamber of Commerce. Dr. Yusuf, you're welcome, sir.
Thank you very much, Mr. Apampa. My apologies for joining a bit late. Now, listening to the last speaker, I think there's very little for me to add, because she has practically presented what I have in my own presentation. Highlighting all the key areas in the CAMA that are beneficial to SMEs. First, let me commend CBI for putting this together. And let me also commend the key drivers and promoters of this new CAMA. In particular, the Presidential Enabling Business Environment Council, led by, of course, chaired by the Vice President, and of course, driven largely by the Secretariat, which is headed by Dr. Jumoke Oduwole. They put in a lot to make sure that we get this law. Also, the business law session of NBA, they played a very big role in this. And of course, the 8th National Assembly, especially the then Senate President, Dr. Bukola Saraki, showed a lot of interest in the 8th Assembly to ensure that we have this reform. And of course, the current National Assembly for the final passage. What is important in all of this is the need for us to regularly review our legislations. We are talking of CAMA now. CAMA, 30 years ago, 30 years legislation. This is the first major review of that legislation. So both the CBI and those of us in the advocacy space, we need to do a lot more to ensure that our legislations are more contemporary, particularly legislations that relate with business. This is just one of such legislation. We still have a whole lot of archaic provisions in many other legislations, in NIPC Act, the Export Promotion Act, NAFDAC, SON, the Nigeria Customs Service, even CETA, SEC, CBN, and all of that. There's a whole lot that we need to do to make sure that these laws, these legislations are more contemporary. So beyond CAMA, I think we should be looking at other legislations to make sure that we bring them in line with the current realities of business. Because the business landscape is a very dynamic space. And when you are operating in dynamic space and you have a very static legislative framework, there's a way it slows down the way we do business or the pace of business growth and development. So having said that, just as I said, quite a lot of what I wanted to say has been covered. It's now much easier for SMEs to become incorporated. Now, with only one person, that's Section 18, you can become an incorporated company. That is one very good development. But we need to also realize that being an incorporated company or a private company, as against being an enterprise, also comes with some statutory obligations. So while we celebrate the fact that it's now easy to transit from being an enterprise to being an incorporated company, we also must bear in mind as SMEs the responsibilities that go with being an incorporated company, because there are all sorts of compliance that goes with it.
Sorry, can I jump in there? Because you are touching an important question that people have been asking in the forum. That can I go from a business name which is this enterprises I think that you're referring to. Can I go from a business name to like a limited liability partnership? If I'm, for example, an accounting professional, can I move from that business name to that? And also people are asking, what is the difference between that new category of the small business and this enterprises as we had it before, business name? So really it's to understand that old category of business name. Is it still, what relationship is it going to have to these new LLPs and the new small business category? You can.
I think this also relates to the profile of the company. There are some businesses you may not be able to do if you are not an incorporated company. There are some companies that do not do business with you if you are not an incorporated company. So it depends again on how you want to position the business and the kind of aspiration you have as a business owner. So it's a status thing, it's a profile thing, and it's a categorization thing. So it depends on what strata of business that you want to operate in. So that is my. I'm sure the last speaker may have some other comments on this when we come to Q&A. Electronic signatures, this is also very good, but we need to also worry about issues of cyber security and all of that, because the more we go electronic, the more the risk of cyber crime, because all these are challenges that we need to bear in mind. But for businesses, of course, it makes businesses much easier to do. Holding of AGMs outside the country, section 240, that is also an ease of doing business thing. It makes it easier. You don't have to come around here for you to hold your AGMs and all of that. Virtual meetings, section 243, sub 1. Now it is very easy to hold meetings virtually. You don't have to gather and spend too much money putting people together, renting halls and all of that. And people don't have to be traveling all over the place. But again, there's a flip side to this, because many SMEs also provide services for the AGMs. They provide services in the physical space. So if you are faced with a situation that most meetings are now moving into the virtual space, that is loss of business for some SMEs. You know, some of them provide catering services, they provide decoration services, rental services, the hospitality industry and all of that. This, of course, is going to hit them, because as more activities move into the digital space, that is less business for them, because many of these SMEs also operate in the physical world. So if a lot of things are now moving into the digital space, I think that may be an issue. Appointment of company secretary not necessary, section 330. That again is a welcome development. It's a relief for those who are in SMEs. They don't have to bear additional costs and all of that. But again, we have a lot of professionals who are SMEs who are also company secretary who offer these services. So if you say that it's no longer mandatory, that poses a risk to their own employment. It poses a risk to their own business as well. You know, so in all of this, there are winners and there are losers, because many of these company secretaries, many of them also depend on the small businesses. You know, they depend on a lot of companies that are not that big for their own livelihood. The definition of a small company, section 394, this has been addressed by the last speaker in a very detailed manner. We have a new definition of a small company now within CAMA, and under CETA, we have a different definition. So these are things that we need to reconcile, and just as she said, we need to take this legislation in conjunction with other legislation, because you cannot take this legislation in isolation. If we are saying a small company under CAMA, it's a company with a turnover of not more than 120 million. Formerly, it was 2 million. And a net asset value of not more than 60 million. Formerly, it was 1 million. A company that has 25 million turnover and below. So these are issues that we need to reconcile so that we don't, in the process of celebrating this, don't jump into another trap in another. Use of electronic copies for registers, 753. The last speaker has addressed that very well. I don't need to talk about that. Consent of Attorney General for company limited by guarantee. Well, we now have a limit of 30 days for Wood General. I think it's a very good development for those who operate in that space. And many of them, by the way, are also small businesses and they interface with businesses. Common seal is no longer, it's now optional. It's a welcome development. CAC's power to suspend trustees, section 839, is perhaps one of the most controversial sessions, but again, we are not so much in that space, so I may not go so much into that. Replacement of authorized share capital with minimum share capital. Again, that has been addressed by the previous speaker. It introduces some flexibility and some ease in terms of, business registration and the issues of share capital. Exemption from appointing auditors, section 402. Small companies or any company having a single shareholder are no longer mandated to appoint auditors at the annual general meetings. This again, of course, is a relief to small businesses. It reduces their burden in terms of costs. But again, it poses a threat to all our small professional accountants who also depend on SMEs to prepare their audited accounts. So if this is no longer mandatory, this may pose a threat to all these small professional firms, small businesses who are accountants who normally rely on small businesses to provide the business of audit. But just as the last speaker said, well, under the Company Income Tax Act, you are expected to also prove that your turnover is in a particular space, and you need an accountant to do that. So we may not be able to escape completely from the need to get auditors to prepare their accounts. Exemption from appointment of company secretary, I think I've addressed that. Return in filing fees, section 223, subsection 12, I think the last speaker also alluded to this. The reduction in filing fees is a welcome development. It has been reduced to 0.35% of the value of the charge. And this is expected to lead up to 55% reduction in the associated costs payable under the regime. This is a very good development, which we welcome. So as I was saying, of course, there are winners and there are losers. The flip side into this is the loss of jobs by small audit firms, company secretaries that depend on a large pool of SMEs for patronage. Then the more businesses go online, the more we go digital, the more we pose a threat to SMEs in the printing and publishing sector. Before now, many of them have been complaining that they are losing business. They print receipts, they print invoices, they print annual reports, they print so many things. Now that there is a very aggressive migration into the digital space, these SMEs are becoming endangered in terms of the businesses that they do. So the printing and publishing sector is facing a very serious risk of extinction. The more we go digital, that is not to diminish the importance of going digital, but you must realize that this is also hurting or posing a risk to some jobs. E-meetings, virtual meetings is not good. It's not good news for the hospitality industry. It's again means loss of business to them, because many of these hotels, whether big or small or medium, they depend on these physical meetings, catering services, and all of that for their businesses. This also has some implication for the aviation sector. If a lot of things can happen virtually, not physically, you don't have to travel much. You know, so it may also pose some risk to the aviation business, the aviation sector. The need for travel will reduce drastically, and we have all sorts of SMEs around the sector. The car hire service, those who sell things at the airport, and all of that. So that also could be a risk. Then, of course, I talked about the risk of heightened cybersecurity. The more things go digital, signature, reports, and all of that, the more we need to worry about cyber security. Of course, just as I said, there are tax implications of migrating to a limited liability company. That means that the whole gamut of the provisions of the Companies Income Tax Act will apply to the entity that moves to become a private limited liability company. So even if you are not paying tax, you have to file your returns. You are now responsible not only to the State Inland Revenue Service, you are now responsible also to the Federal Inland Revenue Service. I've talked about the definition of small company under CITA, that is Company Income Tax Act. A small company is a company with a turnover of 25 million or less. Section 394 of CAMA defines a small company with an annual turnover of not more than 120 million. So that is something that we need to take note of. So if we are a small company in the eyes of CAMA, we are not a small company in the eyes of CITA. So, and the migrated enterprise will be fully subject to both the federal and state tax administration for federal and state taxes. I mentioned that earlier. So the demand or the challenge of compliance or the burden of compliance is likely to increase. So we need to bear that in mind. I've talked about the issues of auditors, even though under Section 402 of CAMA, appointment of auditors is not mandatory. But under CITA, you need to prove with an audited account that your company is a small company. So in a way, I think you still cannot avoid relating with auditors. So ladies and gentlemen, these are the views that I have on how CAMA will impact small businesses. On the whole, I think it's a very good development. But just as we often say, these things are work in progress. And more importantly, we should begin to look at other legislations and see how we bring them in line with current realities of doing business, so that we can align our legislations with the current ways, the dynamics of the current business environment. So I want to thank you very much for this opportunity. Thank you for listening.
Thank you very much. If I may very quickly then bring up some 4 or 5 questions that we have here, which any of our panelists can respond to, that taking into consideration the principle of conflicts of laws. I will want to know which classification of small company will supersede in effecting statutory compliance. Is it the provisions of CAMA or is it the Finance Act?
I think you need lawyers to weigh in on this. So let me ask.
Okay. In terms of the threshold, I believe that the two can be applied independently in terms of the threshold now for small companies. What it means in effect is that you are a small company, you may be a small company in the eyes of CAMA, but you may not be one in the eyes of the tax authority, and then you can still comply. However, in terms of the financial reporting standards that are used, Section 59 of the Financial Reporting Council Act actually says that where there is a conflict in this instance, that the financial reporting standards of the FRC would apply. So where there is a conflict in terms of how you should report financially, threshold now, how you should report financially and the standard you should use, then the standard of the Financial Reporting Council would apply. But in terms of threshold, I believe that companies can still independently apply these laws.
Okay, please throw more light on the companies registered by guarantee in respect of tax payments and filing annual returns.
Okay. For companies limited by guarantee, they are not making profit. So I may not be able to speak to the nitty-gritty of the tax part of it, but all I know is that it is still the company and the process of filing returns as the CAC in terms of small company or not will still apply to a company limited by guarantee.
Maybe since we are a company limited by a guarantee, I should share our experience.
Yes.
Our experience is that you have to have your annual returns, your audited statements, you have to file your annual returns, and that from time to time, the tax authorities will come and do tax audits on you. That's for sure. And in fact, we had a tax audit that even started from, is it 2006 or 2007, right to 2019. They reserve the right, it's their right to come and do that kind of audit at any time. So yes, you may be tax exempt, but you are not exempt from being checked that you have complied with this status. So you would have to continue with that. Regis Uzoma says, I'd like you to share further insight on the interrelationship between the right of first offer and the tag-along rights. Where does external buyers come in? Where do they come in? That's
okay.
With shareholding, yes.
Okay, so for right of first offer, it's typically it's with regards to existing members, shareholders. So what it states is that you would not be able to offer. So if I were to want to sell my shares to another person who is not a shareholder, a non-member, I would have to offer those shares to an existing member first before, and then upon a notice. If an existing member is not interested in buying the shares, then I can then proceed to sell to a non-existing member. But for tag-along rights, it's really with regard to, it's to sort of ensure that when another person is coming on to control the company, because when you sell 50% or more of the shares of a company, you are more or less changing control. And so this is just to ensure that in that process of changing control, the minority shareholders are not left on the side or sidelined. You also want them to have that equal opportunity to say whether they want to stay on in that company or they would not mind being bought out. So for tag-along rights, it's saying that if you want to sell more than 50% or more of the company, shares of the company, then the person who is buying those 50% shares or more has to consider those minority shareholders to the point that you're asking them, yes, we also want to buy your shares if you are interested. And you must be having that negotiation with them on the same terms with which you're having the negotiation with the majority shareholders. So it's really about minority shareholders. I hope I've been able to clarify the distinction.
Okay, thank you very much. I have a question here that I'd like to put to Dr. Muda Yusuf, and it is from a gentleman from an SME called Smith's Work. They are the example that I gave to you on the NAFDAC issue. And they're saying, how do we address government agencies who have a different definition for SMEs in the determination of agency fees to be paid? A case in point is that of NAFDAC. The agency says that companies involved in importation cannot be classified as SMEs. irrespective of their employees' numbers and their assets or revenues. So in their case, 2 employees, turnover less than 5 million, NAFDAC says they're not an SME simply because they're involved in importation.
Well, I think this is an advocacy issue, because I know that the Vice President is very passionate about issues of SMEs. He was very instrumental to reduction in fees and all of that, particularly with regard to NAFDAC and perhaps SON. So if we work with other advocacy groups like the Lagos Chamber of Commerce, BI and all of that, it's something that you can escalate to ensure that you bring NAFDAC in alignment with this other more convenient, more investment-friendly provisions. Because the whole idea is about promoting ease of doing business. So if one legislation will do it better, then I think that legislation should apply to all other regulatory agencies that really business. So it's an advocacy issue, and if you bring it up to us in the chamber, it's something that we can take up first with NAFDAC. If you don't achieve result, then you can go beyond them to ensure that these things are streamlined.
Okay. Do we have any more questions? Please put it in the Q&A section, or rather than the chat box. But I wonder if I may ask then, so do we see this as a great opportunity for MSMEs, all things considered? Is this version of CAMA much better than anything we currently have?
For me, it's far much better. It's more contemporary. It has taken into account the dynamic nature of business. I mean, we can see a lot of things that has to do with digital application, recognition of electronic signatures, documents, and so on. It's far, far much better. There's no legislation that is perfect. That is why I said that these things are a work in progress. We improve them as we go. But by far, irrespective of whatever there are, so I mean, the few shortcomings here and there, it's a great improvement over what we had before.
What does the Lagos Commerce have to offer MSMEs? As an MSME, if I join the chamber, is there a section for me?
Yes, we have a section. We have an SME group, and almost 80% of our members are actually SMEs. But this economy is actually almost 90% SMEs anyway. So the chamber can only reflect the structure and character of businesses in the economy. So there's a large room for SMEs in the chamber. We give them concessionary fees. So there's a lot that they can get in the area of advocacy, in the area of business development, in the area of trade promotion, in the area of networking. So there's a whole lot that they can get. If they visit our website, they can get a lot more information on what we offer. And you can reach us. We encourage more SMEs to be part of us.
Okay, thank you, sir. Ms. Tomilola, what does Perchstone and Graeys have to offer MSMEs? Or are you only for the big corporates?
Not at all. We actually have a team dedicated to small and medium businesses. And so we understand that they are growing. We understand that the resources might not be like that of the large companies. And we have bespoke packages to be able to meet their legal services, inquiries, or instructions. So we're really, really happy to work with SMEs. We actually have an SME hub as well, and it's a growing one. And we were hoping that everybody who's listening on who is an SME would also be really pleased to join that hub.
Okay. Okay. We have people still talking about filing returns to FIRS. For example, we have an anonymous attendee who said that FIRS, that they wanted to be closed down. But now they're wondering about filings, that their monthly returns to FIRS. I think that must be on VAT or something, because
Yes,
you don't
that's
do
VAT.
annual returns monthly.
Mm.
They say they're not doing any work at the moment and they filed for business closure. Is there anything, any advice to be given to them?
Is this a business name or a company?
Okay, I'll tell you now. They said, I've been working with the business name since 2013, and they used to do the yearly return to CAC, but they do FIRS, but due to no job coming, they wrote FIRS for business closure. They don't earn enough to sustain the business, so it's business name.
Okay.
But they don't want to be taxed by the law. I think it's taxed by the law. Yeah.
Typically, for you to close a business, even if it's a company, for the FIRS, there are no liabilities or payments to be done for the purpose of closing. What will be required of you is to ensure that all outstanding liabilities are paid. So in terms of VAT, since it's a business name now, all its VAT returns that it should have done, it will still be required to do that. If it's a company and you have been making profits, you still be required to, make your CIT returns as well. And at the CAC, if it's a business name, you would just inform them, give that notification that you're no longer a going concern as a business name. It's only a company that would then go through the rigors of, for instance, winding up in line with the provisions of CAMA. So I think that the person should write give the notification to CAC, write to the tax authorities. They would then give a notification of what are the outstanding liabilities. And once that is done, they would then take off the name as a going concern in terms of tax.
Okay. I think a link has been given in the chat area, which I have just posted again for those who are interested in watching the video again of this session. It's available and you can just copy it down so that even after this, you can continue with it. I think with that, I don't know if there are any final words that our presenters would like to say now, and then we can bring this session to a close, as I don't see any new questions.
Okay, if I might just state that the CAMA has mentioned is very significant, and it's also about over 800 provisions, and quite a number of them are new. So it's going to take a period of time. It's going to be a transitioning period where people are getting to know about the law. And yes, we have received some pushback already on some provisions, but there is no perfect law. We can only work hand in hand with the regulators to ensure that as we are applying the law, we identify the gaps and then see how we can work around those gaps to ensure that the objective and the intention of this review is then fulfilled, which is to make the business climate a better place, and to also other things like layering transparency on the business climate, accountability, increasing the work or the way that we do our business, increasing business efficiency. And I think that if we do that, we are determined we're going to have success results and all.
Okay, I think people would like to know how they can continue to reach you and continue this conversation. So in the chat box, if there's any way that they can reach you or an email address they can reach Perchstone and Graeys through, they would like to know how they can do that as well.
I'll drop that in the chat box.
Okay. So Dr. Yusuf, I wonder if you have any last things to share with us. So I see 2 new questions have come up. But, yeah.
Okay, do I go ahead or you want to ask the questions?
No, I think people are thanking the panelists and they're asking for information on grant opportunities for businesses. So if you can comment on that with your closing remarks.
Well, first let me say that the CAMA is one of the responses that we have got from government as a result of the advocacy from various business groups on how to make businesses better. So I want to appeal to all business owners and SMEs and large enterprises to always scale up or escalate what challenges there are in the business environment, because those in government, the policymakers, most times they are disconnected from the reality of the business environment. And unless we bring some of these challenges to their attention, they may not know. So just as I said, this is just CAMA. There are all sorts of legislations around that businesses have been grappling with. We need to ensure that we continue to engage the government to create an enabling environment from all perspectives. So this, in the Chamber of Commerce, this is what we do in addition to supporting businesses to grow. And I also want to say that even though there are a few challenges around in the economy right now, things will get better. This economy is a very big economy. If you get our policies right, if you get our regulatory environment right, there's still a lot that you can do domestically. So the opportunities are there, and we continue to work with government to ensure that we create the space and the environment for small businesses to do much better. In terms of grants for businesses, I think Soji himself is perhaps in a better position to advise on how small businesses can get grants. What I can say is that I know that the Central Bank of Nigeria has been doing quite a lot in terms of intervention funds through the Bank of Industry. Quite a lot of opportunities are there. If you visit their website, I think you can get a lot of information, particularly Bank of Industry, on some of these small business supports. We have the Development Bank of Nigeria. It's also a development bank, also supporting small businesses. We have Nexim, we have a Bank of Agriculture and all of that. So let us just try, let's reach out to these institutions. Don't let us just form conclusion through perception that you have of them, because sometimes perception is not reality. So just try and reach out to them. But in reaching out to anybody for grant or for credit or for anything, you must also ensure that you keep proper records. You must have something to show. You don't just walk up into a bank or into a grant giver or a venture capital investor and say that, okay, come and give me money. There must be something that you have to show. So packaging of your business, keeping proper records, having very good structures, even as SMEs, I think we also go a long way in accessing some of these opportunities. Thank you very much.
Thank you very much, sir. It remains for me to thank our panelists very much and to thank the attendees as well, because all of those questions have been very engaging. There have been lots of questions that have been asked. Please, you can watch again on Facebook. And when we have the recording of this webinar from Zoom, it will also be available on the MSMEstandards.com website, as well as the CBI website. That's cbinigeria.com. You'll be able to follow. People have asked, are there going to be more webinars? Yes, there will be more webinars. Thank you for responding to our poll. We will take that into consideration. We're going to try to make sure that we have at least 2 webinars a month, at least 2, on informative topics, especially things that are topical and that need to be addressed as quickly as possible by MSMEs. So distinguished ladies and gentlemen, on behalf of MSMEstandards.com, let me thank you so much for joining this webinar. And thank you also for responding to our poll. Thank you. Okay,
Thank you very much.
We'll end the webinar here. Thank you very much indeed.
Thank you for putting
Thank you
this
very
together.
much.
Thank you. Okay.